Hello friends, welcome to my 10 cents. In this video, we will cover what are the different ways to invest in gold for a person residing in India. But before we jump into the video, I want to highlight two other videos that are available to you on gold. In case you haven't watched it, I would strongly urge that you watch those videos as well. The first video covers the history about man's fascination for gold. Why are we so fascinated about gold? What is the real genesis behind it? The 4,000-year-old fascination. That's in the first video. And in the second video, we go and analyze, is gold really a good investment? How has the gold prices moved historically? How is gold stacking up against the other investment options that you have available today? The links for both these videos are there in the description. I would urge you to watch it in case you haven't watched, because these two videos give you the foundation for gold as an investment class. Now with that background, let's look at what are the ways available for somebody in India to invest in gold. There are 6 ways to invest in gold. Number 1, physical gold. Here you go and buy gold coins. And if you're a very rich person having lakhs of rupees to invest and probably crores of rupees, you can go and buy a gold bar. But you go buy the gold, take physical delivery of it, store it in your home or in a locker. You can buy gold from a jewelry shop or from a bank. But remember, if you're buying gold from a bank, you can only buy the gold, you cannot sell it back to the bank. If you have to sell it, you'll have to go to a jewelry shop. This is the oldest and the most common way of investing in gold. Physical gold. Number 2, in fact, number 2, 3, 4 and 5, which is the next 4 ways of investing of gold, can actually be put into one bucket called digital gold, where you don't have physical ownership of the gold with you. The gold is held by a third party. You only get proof of ownership of the gold that you have with that third party. That's the digital way of owning gold. So, what is the second way? It is called EGold. In EGold, it is a product offered by National Spot Exchange. It's a commodity exchange, and they offer you this product where you can buy contracts that they put on their exchange. These contracts are backed by physical gold, in secure bonded warehouses, and the contract value is the value of the gold that you want to own. At any point of time, you can pay additional charges and take physical delivery of the gold. And these contracts are held in a dematerialized format, DMAT format. If you are a share investor, you'll be very familiar with this. In a share investor, when you buy shares of the company, you don't get physical share papers. It's all held in an electronic format, in a DMAT format. And for investing in this, you have to open a separate DMAT and trading account with NSE, National Spot Exchange. Don't confuse this with National Stock Exchange. This is National Spot Exchange. Okay, separate entity. This is how you will own a EGold. Separate DMAT account, separate trading account. Go and then buy the gold contracts available in the National Spot Exchange. And each of the gold contracts are backed by physical gold in bonded warehouse. At any point of time, you can sell the contracts, get your money, depending on the gold price at that point of time, or you can take physical delivery of the gold as EGold. Another interesting product available is called digital gold. In digital gold, you can buy gold for as little as, I think, 1 rupees. And whatever money you give, the gold is bought against that money and stored in a secured warehouse. This product is offered by 3 companies. One is Augment Gold, second is MMTC PAMP, and third is Digital Gold India. And it's very easy to buy. You can pick up your Paytm application or a Google Pay, and I'm sure there are others. Even these companies also have their online purchase formats, and you can buy gold. Okay. This is the third way of buying gold. So, physical gold, EGold, digital gold. The fourth way of buying gold is through gold ETFs. Now, this is a global product. Internationally, a very large quantity of gold is bought in this format, or investments in gold happen in this format. How this works is very simple. You have the companies, typically, for example, the companies which have set up mutual funds in India like ICICI or Axis Mutual Fund or HDFC Mutual Fund, they set up an exchange traded fund Okay, it is an entity created which will take money from investors and use that money to buy the gold and store it in a physical format under bonded, secured, insured warehouses. They work exactly in the same way the way you buy your shares, where when you buy shares, you get shares in a demat format. Here, instead of share, you will get a unit, exchange traded fund. Each ETF fund has a unit. That unit comes to you in a demat format. And each unit corresponds to gold, which is stored in the warehouse. Now, the interesting thing or the important thing that you need to note here is to purchase gold ETF, you need to have a demat account and trading account. This demat and trading account could be the same demat and trading account which you use to buy shares, if you have one. Okay. So if you have a demat and trading account, let's say with Zerodha or ICICI Direct, just log in, go to Gold ETF section, and you will find various ETF units listed. Every day the price of the ETF unit is updated depending on the prevailing gold price, and you can purchase. Now, how this route differs from EGold and digital gold is that in EGold and digital gold, you have the flexibility to take physical delivery of the gold. Here you do not have that. You cannot go to a gold ETF and tell them that, you know what, I want the physical gold because I have my daughter's wedding or some other purpose. That is not possible. If you want money to buy gold, you have to sell the ETF units back to the ETF, and they will give you the money depending on the gold price that is prevailing. This is how gold ETF works. Now, typically, gold ETFs are set up by mutual fund asset management companies or AMCs, like I told you, ICICI Direct, ICICI Mutual Fund, ICICI Mutual Fund, Axis Mutual Fund, HDFC Mutual Fund. Now, they have realized that when you set up an ETF, there are a large segment of investors who may not have trading and demat account, and many of them would be just investing in mutual fund, through a direct or a broker or through their banks. To allow these investors to also own gold, on the gold ETFs that are set up, these AMC companies will put a mutual fund on top of it. They are gold mutual funds. So when you buy into a gold mutual fund, the way you buy any mutual fund like Axis Blue Chip or Canara Robeco Blue Chip or any mutual fund that you buy, when you invest into that mutual fund takes money from you and invests into the underlying gold ETFs. So here you don't need a demat and trading account. That is the only difference. But the rest of the mechanism works the same. Mutual fund, when you invest in a mutual fund, you will get mutual fund unit with you, okay? And there will be an NAV published. In case you're not familiar with how mutual funds and all work, there is a separate video of ours. I would urge you to watch that so you can be very knowledgeable on mutual funds. But coming back, so you have a gold mutual fund which will invest in a gold ETF, and gold ETF invest in gold. So just to recap before we go to the sixth way of investing in gold, first is physical gold, second is e-gold, third is digital gold, fourth is gold ETF, and fifth is gold mutual fund. Your e-gold, digital gold, gold ETF, and gold mutual fund together can be classified as a digital format of ownership of gold. The last way is something called as sovereign gold bond. Okay. This requires some understanding of how bond works. If you're not familiar with bonds, again, there is a video available. I would urge you to go and watch it. It will teach you how bonds work. But for this video, I will keep it very simple. In a sovereign gold bond, Government of India issues a bond. You as an investor can buy that bond the way you buy a share in the share market. These bonds are for 8-year duration. At the end of 8 years, government will take the bond back or cancel the bond and give you money back, whatever they have borrowed. Now, the interesting part in a sovereign gold bond is when the government issues the bond, that bond, the value of the bond is fixed basis the value of the gold price at the time of issuance. 8 years later, when the government returns the money back to you, the money is returned on the basis of gold price that would be prevailing at that point of time. So if at that point of time, the price of the gold is 30% higher, you will get 30% more money. If the price of gold is 10% lower than when you gave money to the government, you will get 10% lower. Okay. So this is how a sovereign gold bond works. Now, let us compare the 6 ways to understand which is the best way to invest in gold. Now we will compare the 6 products, the 6 ways on 3 parameters. First is returns, second is safety, and third is convenience. From a returns perspective, sovereign gold bond is at the top and the best way to invest in gold compared to any product available out there. Why? In the case of sovereign gold bond, as we have just explained, there is no physical gold involved. The government is only using the gold price to fix the value of the bond, but nobody physically buys gold. What does that mean from a returns perspective? When you go and buy gold physically, there is an international price available for 24 karat gold, but you will never get that price. The person who sells gold to you will always put a markup of 5 to 8 or 10% on the price of the gold. This is true when you buy a physical gold, when you buy digital gold as in EGold or not EGold, the digital gold offered by Augment Gold or MMTC PMP or Digital Gold India, there is always a markup of the gold involved. Now, if you go buy gold through mutual funds, Gold ETF or even the EGold, at the end of the day, somebody is buying gold from a bulk seller, wholesale commodity seller. That person also will put some margin and markup. That's why he's in the business. So if you want to physically buy gold or even digitally buy gold and somebody buys the gold physically for you, there is always a markup. There is always a price difference between the actual gold price and what you get. Whereas in sovereign gold bond, since there is no physical purchase involved, there is no need to pay profit to a third party, you get the best gold price. In fact, if you're buying it online directly, the government gives you a 50 rupees discount to the prevailing gold price. Forget markup, you're actually getting a discount. Okay. First reason why sovereign gold bond is the best from a returns perspective. Second, in sovereign gold bond, in addition to the gold price benefit that you have, the government pays you 2.5% interest every year. Every year on the price of the bond that is issued, you will get 2.5%. No other way of investing in gold will give you an annual return like this. Every year you will get 2.5%. Third, sovereign gold bond is the best way to invest in gold from an income tax perspective also. Now, when you buy a physical gold or other products where there is a physical gold purchase that is involved, there are various tax leakages that happens. First, there is always a GST element on the gold that is being bought, which is again paid by you indirectly or directly as an investor. When you sell the gold and you have a profit, you have to pay tax on the profit, the capital gains tax. Now, in this video, we will not get into what is the capital gains and all of that. That is subject for a separate video. You can alternately read the detailed article that is available on our website where we've covered those. But long story short, all the ways of investing in gold, except sovereign gold bond, you have a tax leakage that will happen. So because of these 3 reasons, which is there is number 1, no markup, sovereign gold bond gives you a discount. 2, there is income tax benefit in investing in sovereign gold bond. And 3, sovereign gold bond pays you 2.5% interest every year. Sovereign gold bond is the best way to invest in gold. It gives you the best returns. Now, amongst the 5 other category, obviously physical gold and digital gold will come at the bottom because there is a physical gold you have to buy, there is markup, and then even when you buy digital gold, you don't really get the transparent gold pricing. All of that is there. In the case of gold mutual funds or gold ETF, the markups and all may not be as much. Again, you don't see that, but you have to pay every year charge to the AMC for the mutual fund investment. It's part of your NAV. It's built as part of your NAV, the charges. So overall, if you look at it, sovereign gold bond is in one class. Rest of the people stay in the second class. In the second class, if you want to put it, I would put probably gold ETF, gold mutual fund, because they are more transparent. That's what I have gained from a lot of my conversations with the fund managers. And then you have, digital gold, EGold, and then you have your physical gold. So this is how it stacks up on the returns perspective. What about security? In the security also, the ranking is broadly the same. At the top of the class, you have sovereign gold bonds because the counterparty on the other side of the table is Government of India. If you cannot trust Government of India, there is nothing more riskier or safer, nothing more safe than Government of India in this country. So it's the best counterpart. Second comes, in my view, gold ETFs and gold mutual fund. Why? Yes, all the digital gold format providers claim they store it in secured bonded warehouse. In the case of gold ETF and gold mutual fund, there is a watchdog called SEBI sitting on top of it, monitoring everything closely. And that gives me a lot of comfort. And I have spoken to a lot of fund managers who are in the industry. And the learning that I've taken away is that they are done in a very safe and secure manner. And there are third-party audits and all of that. While EGold, and in my research, I could not find out if national spot exchanges, how closely are they regulated by SEBI and all. That's part of the homework I have to do for later. But for the moment, EGold and digital gold definitely, I haven't come across any literature which says that digital gold is actually regulated by any entity, the MMTC, AMP or the Augment Gold or Digital Gold India. If some of my viewers or anybody knows can correct me, then I'm happy to stand corrected. You can put it in the comments. But my understanding is the digital gold and all are not in the same category of regulatory supervision as a gold mutual fund is. So I put them in the lower bucket. And the last from a safety perspective is physical gold, simply because the entire ownership of safety and security is on you. If you're comfortable storing it in your locker and you think that's safe, great. But there have been sporadic cases, at least I've seen, where even bank lockers have also been burgled. Smart thieves, funny stories, but not really relevant for this. But at the end of the day, that can't be as safe as giving money to Government of India, which is sovereign gold bond. Third parameter is convenience. Now, if you look at convenience, I think digital gold, where you can simply open your phone, Paytm or Google Pay, and just swipe and purchase gold at the click of a button for as little as ₹1, is perhaps the most convenient way. You don't need to bother about any demat account, trading account, physically buying the bond, and then waiting for the bond to mature to sell it back and all of that. Okay, you don't need to wait for any of those things. So digital gold, to my mind, is the most convenient way. Okay, maybe perhaps physical gold is the rest of the things. Perhaps physical gold will be convenient to somebody else. For someone else who has a demat and trading account and who's buying shares very actively, buying gold ETFs will be more easy. Somebody who's an avid mutual fund investor, a gold mutual fund may be more easy. It varies depending on what your use case is. But digital gold clearly stands out on convenience. So, friends, that's how the 6 ways of investing in gold stack up. I've laid it out all to you. I would love to hear your comments. If you have more information than what we've provided in the video, please provide it in the comments. Wish you all the best if you're looking to invest in gold. As I've said, sovereign gold bond is my favorite way of investing in gold. I leave it to you to decide what is your best way of investing in gold. In the meanwhile, if you like the video, please press the like button and do subscribe to our channel. And see you, bye-bye, in the next video.